What a crazy week! From India's budget announcement to the results announcement of three of the five major FAAMG stocks Facebook, now known as Meta, Google, and Amazon, we saw it all. While Google and Amazon performed quite well, Meta's results have caused the company to lose 251.3 billion US dollars in market value and caused Mark Zuckerberg's net worth to plunge by 29 billion US dollars. That's more than the GDP of Nepal, which is 24.88 billion US dollars. But what caused such a massive loss? Welcome back to Revolution Read On, a daily podcast where we break down one story from the world of business and finance. Here's your story for today. Meta's Q4 earnings report has been historic for several reasons. It was the first earnings report since the company rebranded itself. It also marked the first time that Facebook saw a decline in daily active users since it was formed. And last but not the least, it led to the biggest wipeout in market history. This comes even though Meta's revenue was 33.7 billion US dollars, up 19.9% from last year. Facebook's monthly average users or MAU were also up 4% from last year. But its daily active users, that's DAU, fell by 500,000 from 1.930 billion to 1.929 billion. Now, for many, this wasn't surprising. Facebook is a thing of the past, a relic of history for many who now prefer apps like TikTok and Snapchat. But this decline, though seemingly minor, may be the death knell for the social media platform. Worse still, this was not the only reason the company's shares fell. Meta revealed that it expected its Q1 2022 revenue to be around 27 to 29 billion US dollars. This is much below its current revenue and analysts' expectations. And the credit for this goes to none other than Apple. Last year, Apple introduced a new feature that would allow people to turn off an app's ability to track their online activity. Now, this may seem like good news to you and me, but for companies like Meta, this means a huge loss. Because Meta's apps like Facebook, Instagram, and WhatsApp collect this data, which it then uses to show us targeted ads. If it cannot show us targeted ads, businesses will stop advertising on its apps and it will lose ad revenue, its biggest income source. This whole ordeal is set to cost Meta around 10 billion US dollars. But the company's head said they are working hard to try and overcome this problem. Not just that, it is trying to focus on monetizing the addictive reels that hold the magical power of keeping us glued to our phones. But its biggest play is still the metaverse. Facebook knows that ultimately Instagram and WhatsApp may also lose their charm if another addictive new platform comes up. So it is trying to beat itself to the punch by creating this next addictive platform itself. Genius, right? But on this front also, it is currently just bleeding money with nothing much to show for it. Its metaverse division lost 3.3 billion US dollars in Q4 and a total of 10 billion US dollars last year. This further reduced its profits. And there's no guarantee that this massive expenditure will bear results anytime soon or ever. While Facebook was losing money and people, Google was having a field day. Facebook's loss is Google's gain. Google's parent company Alphabet saw phenomenal Q4 results that pushed its shares up 9%. It reported a revenue of 75.3 billion US dollars, up 32% from last year. The company also recorded a full year revenue of 257 billion US dollars for 2021, reaching the 200 billion US dollar revenue milestone for the first time ever. Of this, Google's ad revenue accounted for 61.24 billion US dollars, up 33% from last year. Retail ad sales accounted for the majority of this revenue as more businesses pivoted to Google Ads thanks to the pandemic. Google also launched several AI related features to help businesses better manage their sales, predict trends, and stock products accordingly. This growth came at the cost of Meta, which saw its e commerce growth slow down considerably this quarter. And this again is thanks to Apple. Meta's chief financial officer claimed that the tracking restrictions that are applied on its apps are not applied on Google, as it is not really an app but a browser. And Google and Apple already have a separate deal under which Google pays Apple billions of dollars to remain the default search engine on Apple's devices. This deal could have further incentivized Apple to tweak restrictions in such a way that they don't impact Google. So, advertisers have jumped Meta's ship and have gone over to Google where they will get better exposure. But all is not well at Alphabet also. The company's traffic acquisition costs have increased from 11.5 billion US dollars in Q3 to 13.4 billion US dollars in Q4, much above analysts' expectations. This means it now has to pay more to get users on board. Plus, YouTube's ad revenue, which is 8.63 billion US dollars, fell below analysts' expectations, which were 8.87 billion US dollars. Not just that, YouTube recorded 15 billion daily active users, a metric that has remained the same since June 2021. This comes as apps like TikTok are taking away YouTube's viewership. So, will YouTube also go the Facebook way soon? Will it also become an uncool app only meant for parents to watch news and cooking videos? Well, even if that happens, it won't be a major blow to Alphabet thanks to Google. Apart from its good performance, Alphabet's 20:1 stock split, that's shareholders get 20 shares for each share they hold, was also instrumental in pushing the company's stock up. It could have hit a 2 trillion US dollar market cap, but Meta's plunge has brought down the stock price of several tech companies, Alphabet included. In other news, Spotify CEO also lost 1 billion US dollars as the company's stock has fallen by a third this year. This is because several musicians have dropped the platform, protesting the fact that the platform hosts Joe Rogan's podcast, despite the fact that he is spreading COVID misinformation. So, is this going to be a bad year for the tech sector? And will Meta recover from this setback? Let us know what you think. Thanks for listening in to this episode of Revolution Read On. We'll be back tomorrow.